that's all you want to do. You want to buy like the stocks are up the most at the end of the day. It's the next day when they would be gapping up. And so, there's a lot of traders that will start out, they'll have a good couple of years, they're in the right place at the right time. And eventually, Mr. Market will teach you lessons that, can be pretty humbling, right? And so for me, I lucked out. I literally, did very well over a 5 year period. And just to show you how cool this I was, I literally quit in April of 2000. I went to travel the world. I thought I was king. And I'm a value guy at heart. So, like, I always love these inflection points where there's a real inherent value to, like, the stock. So I did quite well in 2000, 2001, 2002 because, I was mostly in value stocks and or mostly just sitting out of the market. And, but the market will always, find a way to teach you lessons. And, it's at the end of that bear market where I really, learned some big lessons that I still, carry to this day.
And then you always had this sort of longer term horizon to your trading.
No, I started out just pure homo. So literally in the 90s, right? It just I started to try to learn about fundamentals, but you got to call a spade a spade. Back then, it was a great market if you were just trading momentum. And when the party stopped, like people got burned because they just held on. So at times, right, you can actually do quite well with a clean slate if you're naive and fearless, which I was. And looking back, sometimes you get lucky. And in that regard, basically, I had my first real big drawdown. It was late 2002, and looking back, I think my biggest error then was twofold. Number one, I had way too big of a position size in this company called Overture.
If you're a trader, you have to know about Chart Academy. Chart Academy is the first all-in-one free trading education platform. That's right, absolutely free. No catch, no upsells, no links to sell you something, all free. Proven world-class traders providing an A to Z masterclass on their strategies, their concepts, and their processes that make them the best. From futures, options, crypto, stocks, and forex, everything is covered on chartacademy.com. Whether you want to fix your trading psychology or learn from a market wizard directly, you can do it all on Chart Academy. Not only that, by just spending time at Chart Academy and bettering yourself as a trader, you can get points that unlock exclusive discounts, free trials, and free accounts with your favorite prop firm and trading software. Don't take my word for it. Chart Academy is live. The link is in the description below. Now let's get back to the episode.
Back then, it was one of the best performing stocks in 2002. They were the leader in search before this little company called Google started to steal some of their clients. And so that was a position where I just actually had shoulder surgeries, I was on painkillers. I was top of the world. Like I survived this bear market for almost 3 years. Like I could do no wrong. And within a 4 day stretch, right, the stock had started to deteriorate, broke its 50-day. One day it was down 33%. I lost $2 million overnight. I compounded the issue by, also I was trading out of my IRA account at the time. I took $1 million out of my IRA account, created kind of my own reverse Ponzi scheme where all that money in the option trade lost about 95% of it. So then I created this tax bill that took another 18 months to kind of work out of because then I was living out of my IRA account, and so when you have a tax bill for $1 million withdrawal, right, you owe $550,000 next year, so you can take $550 out and you take $275 out the following year, right? So the smartest thing I did though was regroup and realize that I was very young. The market at that point in 2003, that was just a great 5 years, right? Because that was when China was getting built up. All the commodity plays back then were just going through the roof. And, so I was, I think looking back, one of the best things I've done strategically in my career was, I think traders are at their best when they have a financial security, right? When they have money in the bank that can get them through a couple of years. And, at the time I was, self-funding my life through just my own assets. And so what I did is I took a tenth of my assets at the time. I took $100,000 in 2003, and I basically 60x'd over the next 5 years, and I was able to do that, I think, successfully because I started analyzing like why am I doing so well, and during that period, it was this period of low volatility, and it was a period where you're getting new market leadership. So that's really where I started really developing this inflection point process, where you realize that like okay, trading momentum is only going to get you so far, and then realizing that like if you're fighting a trend with the market going against you, and if it's a high volatile market, then most likely, like if you're wired like I am, you're going to get dinged at some point. So I think taking those learnings and then from there, like realizing that it was going to be a long journey. I mean, I've been self-taught. Use a lot of different methodologies. William O'Neill, whether it's the teachings from Livermore a century ago, looking back, Stan Weinstein, Mark Minervini with his volatility compression pattern. These are all just big influences, and it's taken a long time to kind of fuse them and synthesize them to the point where you're able to kind of combine the technicals with the fundamentals, with the psychology as well. So,
first off, in terms of handling that drawdown, the level of losses in that period of time and that age as well, how did you overcome that?
Well, being young is helpful. I had no responsibilities, so it was just me. So I went to Miami, and basically it was a good place to retrench. And again, looking back, right, I don't think I would have had the calm to rebuild if I didn't downsize. And if I didn't, I was a kid from Brooklyn and came from nothing. So having done what I did in the '90s, right? I mean, it's basically this magical period, right, where you are not realizing like how good you had it, and now like you go through this tough time, and it's like I was lucky because 2003, as maybe it would have been a different story, right? If that thing happened, right as the dot-com era was unfolding. In that regard, I'm thankful that I was able to really avoid most of the really tough period. And so I think like I had a lot of resilience. I've always had a lot of resilience. But from a timing perspective, I was very well rested because I really was mostly inactive during that bear market. I was traveling, living like the life of Riley, and just at that point, I think just starting to really like place of calm where like like okay, if this doesn't work, I have more reserves, and that's super important, right? If you're stretched for money, money's tight, it's gonna be really hard to be successful if you don't have at least a couple of years worth of savings. And I think my biggest advantage was not just that youthfulness; it was that backdrop that I had, where it's just like my overhead was very low, and so it's all those combination of things. But yeah, like youth is a big thing in terms of being able to bounce back. It gets harder to bounce back as you get older.
But you said you took $100,000 at that time, and then 60x. So what did you finish with after that period of time?
Yeah, so it went up to 6 million, and then I learned some lessons the hard way during the Great Recession. So I basically had another big drawdown period. At that point, I realized that it was very important to really focus on fundamentals. I really spent, I'd say, the next 6 years like really diving into like not just like how stocks go up, but also like how they go down and how they bottom. And a big part of that is coming out of the market bottom in 2009, stocks were going up way ahead of the fundamentals, right? And that's where you started to realize that like, hey, there's got to be something here about forward modeling that's important that like institutional investors are going to think about. So that's really was part of the journey where it was like, okay, this is my first. I think the one negative I had was not being there through kind of the bear market, in 2000, late 2002. So that I was very naive and full of confidence, and the market again is going to teach you lessons, right? So I'm self-taught, and that was a lesson in terms of like how bear markets work, and very instructive because bear markets are usually quick affairs, and what you learn during a bear market is that fundamentals really don't matter, right? Stocks go down because they much more quick So what I've learned is that during those periods of volatility, it's best for me to step back and shorting is something that I've tried over the years, and when I like a market like inspirational guy like William O'Neill, has always stated when he was alive that I've never made big money shorting, right? So that for me is like, yes, it's a nice chess game to try to like figure out shorts, but the big money is made in finding multi-baggers that you can triangulate when the inflection point hits. That's where the big money is. So that's like our focus is, understanding through this journey that there's going to be different periods where if you try to bend with the market, you're going to get your ass kicked. And if you follow your process and you stick to that process, you're going to be okay. And of course, you're going to have your periods of underperformance, various things in life can kind of throw you for a loop. And I think the key thing is just sticking to your process, staying in your lane, and that's hard to do. I mean, it's hard to do, and you learn it the hard way, right? So, not that Bill Ackman's a trader, but he had this tough stretch where I've always enjoyed his wisdom that he shared with investors, which is that like you start small and you just build little victories, and as you build little victories, you build momentum and you increase size, and that's how you get out of a big run. And that's still the recipe that I use at this point. It's like going through a tough stretch. You basically you got to really get smaller until you're kind of in a peaceful state where the stabilized, and from there you're not fighting it, right? Because drawdowns happen when you don't just have 1, 2, 3 bad days. You have like one bad week after week, 2 weeks. Like that's where you have a tight, disciplined process. You're going to get there.
Traders, let me tell you about the best futures firm in the trading industry. The largest payout cap across any firm. That is right. Alpha Futures. Alpha Futures has been a proud sponsor of Listen Wisdom for the last 2 years and running. For a very simple reason. They have options for every trader. From their zero accounts to their standard accounts. also their bank accounts. You can see the options on screen right now. They paid out over $50 million around the world, just like you. Their payout value is 3 times larger than any other firm in the industry. They pay out consistently with an incredible support team to back it all up. Not only that, you have the options of getting up to $450,000 in funding capital to help them. Our Futures also offers the only path to professional live trading trading system. For a 30-year career, having these highs and lows, now, is there a moment that stands out to you that really shifted your consistency and longevity?
Nothing that like particularly stands out. I think like having that near-death experience in terms of like when you're almost losing all your capital. I think at that point it was like an inspiration to me in 2002 to like really kind of start this journey of understanding not just like the way the market works, but like really doing a lot of work on psychology as well. So spent those following years of a great guy that worked with Stevie Cohen, Harry Diaz. I think he wrote like 5 or 6 trading books. Brett Steenbarger is phenomenal. He's a great guy. Number one, but he's written some phenomenal books, and we worked together when I was trading my Pershing trading. And I think as you get older, psychology plays a much bigger role. So I think just kind of the market is going to teach you the lessons, and it's important for you to listen to them. And if you don't adapt, you're going to die. You're not going to last. Not going to last.
When it came to these lessons from the market, would it be a case where you would work on one issue at a time? For example, let's say you've noticed, okay, currently my entries not where they need to be, or not effectively executed. But then you also notice like maybe your stop placement isn't the best, or maybe your target isn't the best.
Yes.
What was your sort of process of identifying these issues?
Yeah.
Would you look to just target one at a time, or try and work on multiple layers?
I think simplifying things, particularly when you either in a drawdown or coming out of a drawdown, is the best recipe for reaching escape velocity with the P&L going back the other way. 2015 comes to mind. It was a period where, like, the preceding summers, it was like various European nations had issues with their debt, and you'd wake up and like the market would be down 2% because like Greece was gonna implode on their debt. And at that point, right, I had had to learn the hard way, right? It was a bad year for me, just because it was a period of market chop. We basically went sideways the entire year. There was no trend in place, so I shifted and like, oh well, I'm gonna go and figure out like longer term investing with small caps. And so at that point, looking back, I think that was a very instructive period because don't change the process to bend with the market. You have your process and you bend with the market, but what I mean by that is that you understand, the successful traders will understand when the process is in sync, when everything lines up, and that's when you're putting on size, right? And simultaneously, if the market doesn't align, it's key to not fight that. And so in that regard, I think that's like looking back from a psychology perspective, right? It's definitely the biggest lesson, but also just I think realizing that like it's a constant journey, and as you get older, you become a parent, you get pushed and pulled in different directions. I mean, that's why trading is a lot easier when you're younger. You have more energy, you have less of life coming at you. You've had less, lessons learned, so that you're more pliable and durable. period of time, right? You're gonna have everyone has these periods of underperformance. You have to accept that and like figure out like, okay, well, did I do my best when the process was fully aligned and everything lined up? So for me, I've had a number of years where I've had triple-digit returns, where everything's lined up, and that's a key part, right? It's realizing that like, okay, this is my time, and like, I need to be working my ass off. And when it's not your time, then it's okay to chill out, do some traveling, not trade, right? I don't know any trader who like trades every day and is a consistent long-term, profit generator because you're gonna burn out and you're gonna be trying to bend the market consistently. And for us, that's why we developed more into this longer-term inflection point process because the big money is made, as Livermore used to always say, in the city. And in that regard, it's something that I do have a tendency to overtrade. I think being honest with yourself, that's where journaling comes into play, where you're constantly monitoring like where you're at, right? And you have to be honest with yourself. It's easy to kind of like like hey, like this is just a bad week for these reasons, but the P&L doesn't lie.
Mentioning the down periods, one thing you mentioned on Sharp and Essence was that over a 10-year sort of period, you will have one bad year, one or two phenomenal years, and then good years, good performance, acceptable performance. Acceptable is not the right word. Sort of more moderate performance over the rest. What happens with that one bad year? What's the sort of mindset that takes place during that period? Because when we say 10 years, and you say one bad year, we can easily probably go, it's just 1 out of 10. Right. But then a year, in terms of an entire year's worth of work and time and effort, when we actually think about that, that's a long time.
Yes.
And to be able to come out the back end of that with a